Today is June 24th, 2025. Doing a market review for today in the price action following Jerome Powell's speech at 10 a.m. So breakdown from higher time frame to lower time frame, what you could look for, maybe potentially what you did wrong, what I did wrong, and how we can improve on executions as well. So I've got a lot to cover today, so I don't know if we're going to do questions. But for tomorrow's stream and subsequent market review, if you have any questions from today or from today's video that I'm not able to answer, just due to a time constraint, we will get those answered tomorrow. So make sure you write those down, or I'll go back into the stream tomorrow and answer these questions. Obviously, if it's a short amount, then we can get through, but won't do any psychology-based questions really for today. So I got my notes pulled up here. We're gonna look at sort of the higher time frame, kind of I was looking for, and how that pairs into last week's kind of daily bias. Anyways, so my bias on last Friday, screenshot this, I'll share it into the cord, was that the bottom of the consolidation range is put in, and that we should be bullish now for the rest of the summer and start to target the rest of low resistance buy side and eventually the all-time highs up here. I keep that bias today, blah, blah, blah. This was on the 20th, so Friday of last week. As I was looking for bullish price action going into all-time highs, I was expecting that the consolidation range had been put in. I happened to be a day off, and that's on YM. That's true. On Friday actually was, if you look at YM here, Friday actually was the low right there. Friday was the low, and then we started to expand up. But with this news that came out over the weekend, you have this kind of just gap down that starts to displace, as we saw yesterday and then going into today. Right off the bat, today is high probability price action. And I'm going to get into exactly why. You probably saw the morning, probably wondering what the heck is he talking about. I'm going to get into exactly why it is high probability today, and why I personally am looking for a specific setup to form, and how you can in the future capitalize on that same exact mentality. I'm going to also give resources and links to where this data is backing me up, so it doesn't look like I'm just pulling out of my butt. So yesterday we had this large expansion range going to the buy side, and obviously clearing out the consolidation range we've been consolidating for the past month or two within this range. And consolidation range, the way you know it's leaving is preferably you want to have some sort of external purge and revert. And then you also want to see displacement outside of the range. So anytime you're treating a consolidation, whether it's on a lower time frame, higher time frame, it's more reacting to that instead of anticipating. The more you try and anticipate, at least in the beginning, when that consolidation range is going to be done, the more times you're going to find yourself taking a losing trade. It's best to simply wait for the displacement out of the consolidation range, and then you kind of know we're likely to leave this, especially if you have this mix with this external purge, which in this case was this resting previous week sell side. We had taken out, formed an SMT there, and then started to displace up. That's why today you can look for this clear above the current monthly high, and then as we attack the all-time highs, like I was saying in the Friday's post. And you'll see how as well this plays into a lower time frame perspective. But in terms of the higher time frame, this is what we were looking for. Last week, the week before that, I was, at least personally, bullish on the week. And if you go back to your 1 hour chart and you look at how was the actual sessions for the past 2 weeks, look at the New York session specifically, count how many days it was bullish, count how many times it was bearish. Okay, even in this consolidation range, you're going to see more bullish price action, especially during those key times of New York Open, pointing to these all-time highs. This is the overall drawn liquidity for the entire season of the summer. This is a seasonal low between April and May, and then you start to see this expansion going into August, which typically August is more of this consolidation, but from what we're seeing right now, I'd have no problem with August starting to move a little bit higher. But as you see this, that's why today has this large expansion range. we finally, and for the guys in the private group, and if you've seen my market reviews recently, I talk a lot about how in consolidation ranges, you're not going to have sometimes the week and the day of the bias all lining up. It's sometimes you're only going to have just a session. You only know where the session is going to go, and that's the only ranges you can take. You're left with scalping. You're left with taking smaller trades. You're left with exiting based off close draw and liquidity. This is going to be the hardest kind of days to trade. And that's why in a consolidation range, it's very hard to find any good trades, especially long ones that are going to give you any sort of substantial move. At this point in time, since we just left, we swept the low and now we're leaving the consolidation range, you're starting to open up a lot of these passages where now the week is in line up here, the day is in line up here, and now the session is in line of where there's drawn liquidity, and you have these stacking probabilities and also a stacking range of fractal price action, meaning, okay, if this is up, and this is up, compared to, okay, the week is bullish, the day is bearish, the session is bearish, that's going to be much higher resistance compared to low resistance. Everything's pointing up, everything's going to keep going. That's going to give us the best ranges. And most people probably know that, but it's good to reiterate because of just how important that is for today's price action. As we drop into the lower time frame, we'll look at obviously a bias going to today. I don't think it was terribly difficult for most people to look at it for a bias today, but the 4-hour chart, like I said, we'd swept the previous weekly low here, displaced past it. We've got a 4-hour change in the state delivery above the Friday candle there with a displacement, obviously subsequent displacement with yesterday's price action, knocking out these buy side pools. And do you see any indication that price wants to reverse off of these buy side pools? We look at the 4-hour, no. On the 1-hour chart, same thing. There's no indication that it wants to reverse. Okay, so you trade the continuation until it obviously is showing you it wants to reverse. Where's the higher time frame bias? Up here. So just because it's taking out buy side, it doesn't go, this is where the pattern traders are going to come in, and you're probably going to lose a lot more in these kind of conditions simply because you're looking for ERL to IRL or a pattern and price action of profiles. You're not going to see that a lot of times that it works just by doing that. You need context, you need narrative of everything else working together when those things will shine. So in this case, if the draw is high to the all-time highs, yesterday and today's sweeping of this previous weekly high, and even yesterday's daily high, is not going to make us instantly flip bearish. And you need to know that if you're struggling to find bias is the most important part of information that you can gather, and where 90% of the skill is lied in, I think, is if you can find a bias, you can find the right direction. For 99% of people, if both those things are lining up, you're going to know how to get in a trade towards that draw and be right most times than wrong. So that's the most important thing. So going into today, bias is bullish. Okay, and I mentioned it a little bit earlier, today is high probability price action. Why is that? Because with this specific news profile that we're faced with today, there is a very specific set of rules used to approach something. Okay, if I tell you, when you drive at 6 a.m. in the morning or 4 a.m. in the morning, you're going to have a destination from point A to point B. You can drive probably faster. You can drive more and somewhat aggressively compared to if I were to tell you, yo, go drive from point A to point B, that same points during 5 p.m. rush hour traffic. For maybe people who don't have that in their country, it's just when a bunch of people will get off work and they're all driving back home. You're going to have to be a lot more passive, a lot more patient, waiting for everything to line up, where then finally now you can start to drive back at the speed limit. This kind of day has very specific approaches and rules and regulations that allow it to stall and take longer than what it's normally going to. So if you don't have that approach and you come in today with a normal understanding of, oh, it's going to move at this time and do this around those times in terms of price, that's not going to happen. And you're going to look at this and be like, oh, that's a low probability. Low probability is when what price action is supposed to do on that day and what it actually did in terms of the precision of price. That's when it's low probability, is when they don't match up. When today is programmed to do something that's going to be high resistance and have very specific key times it's going to leave, and it exactly does that, it does not make today low probability. It makes today, in my eyes, high probability because it does what it's supposed to do. to the T. And if you're looking for that, you can execute. If you're not looking for it, you're either going to take a loss or it's just going to look like a bad day, when in reality, there are ways you can trade every single day if you know what you're looking for. There's a very specific protocol for each individual day, whether it's news, Monday, Tuesday, Wednesday, Thursday, Friday. There's an approach, okay? And I'm going to give you data to back this up from both ICT and from previous lectures of mine, from past price action. When Powell is speaking on the economic news calendar, I think I said this in Trading Hall for the private group as well as in the PDF chat. You can go back and probably read through. You want to be waiting until after 10 a.m. 10 a.m. is when Powell is speaking. Especially when we have this large news driver over the weekend, there's going to be a lot of people watching a day like today, right? A lot of attention, a lot of anticipation that it's going to move, and a lot of liquidity being flooded into the market prior to 10 a.m. If you know how to approach these days, the rule is you wait until after he's finished talking, identify the draw on liquidity, use a time-based and obviously price-based target for the draw, and you get in as you normally do, but you're just waiting for later. Okay. And if you go back to, I'm trying to find the picture here. If you go back 620. Okay, I can't find it, but if I can find it later, I'll post it in here. If you go back to a couple of weeks ago, when we had this large news driver, and then this drop down at, I think I probably could find it on this chart actually. We had a large news driver on a Powell speech, and then like 10 a.m. left the low of that respective session. I don't know if I'm gonna be able to find it, but if you know what I'm talking about, and you are able to find, I think it was probably after FOMC or something like that. A couple weeks ago, same exact thing happened. We consolidated until after 10 a.m. and we dropped all the way basically until 10:50, and then 10:50 created this reversal all the way back up into the buy side, and eventually the previous daily high and the previous weekly high. If you know exactly what I'm talking about, and you can pull up the picture, if you can find the picture, someone in this chat, and post it into the chat, I greatly appreciate that because I'm not going to look back for it. But if you know what I'm talking about, you wait until after Powell is done talking. Same thing with Trump. Same thing with FOMC minutes. You wait until after they're done talking. Oh, it was for when Trump was talking about the tariffs with China and Europe or something like that. Go back and look for it. Powell's the same way. Okay, you don't look to trade 930 because 930 is going to be chopped. You don't look to trade the 950 macro because 950 is going to be chopped. You wait until after he's done talking. Normally, he takes around 30 minutes to about an hour for him to be done talking. That leads you right into the last ditch macro. Last ditch macro is going to be this optimal window to be looking for a setup, and it's not cherry picked. It's not, you can't just say, oh, if you're watching this video and you have doubts about it, you can go back and look at it, or you can ask questions in here. But it's shared with the group. It's shared with even in these public channels. There's very specific things of price that you have to be looking for in order for this to work. On the 1 hour chart, you have an inefficiency over here being traded into in discount between the dealing range of this low to this high. You can use this low to this high as well. Drops into discount, fills the gap, respects the order block. Like I said before, bias is still bullish coming into a session. So we're expected to consolidate, obviously drop towards the current daily high, which would be the London session high, as well as any fib projection targets or in the all-time highs that can lead us into those targets. Now that the week, the day, the session has all been lining up, you also can start to target further in time. As we're dropping down into the 5-minute chart, 9:30, 10 o'clock, all chop. It's expected to do that. Okay. As we leave, inefficiency being traded into starts to leave that. You can keep this marked out if you want to. And then right at 10:50, we start the move again. Okay, which is the real move. 1050 drops into the range, offers the inefficiency one more time, displaces up. You have an inefficiency in here, lining up with a bullish order block. In this case, it'd be a mitigation block. Trades into that, displaces again, inefficiency in here with the volume imbalance, trades into it again right after the macro time. Then displaces up, takes out the high, and continues into lunch. This price action is high probability in that case. It does the same thing it's supposed to be doing. There's no difference from it. It's very classic to have this kind of profile, especially when there's news talking. So for tomorrow, I have the same exact approach. I have the same approach of it's most likely going to do the same exact thing, and kind of continue this move higher, where we're going to consolidate, probably during the range, or likely to continue higher. There's also, like I said, I'm going to pull up an ICT lecture that talks about this. But it's the same thing that happened there, except it was a little bit of a different trading range. Power of speech rules ICT. Or he's actually trading back up into the opening range. Man, I can't find any of these things today. Anyways, at the end or in the video recording, I'll put the links to all these things that I'm referencing. So tomorrow, I'm looking, like I said, I'm looking for the same exact thing. This entry during the 1050 macro, displacing up to the buy side, whatever that is. And if it starts to look a little bit choppy, since we have 8:30 news on Thursday, gonna sit out. So entry there is the silver bullet because of the fact that there's no silver bullet entry given before this. Also, we have this last manipulation leg at 9:30. This high, low, lower low. If you want to use this, you can use this. You can use later ones over here. Doesn't matter. That all points us to higher end price. But you have silver bullet trade off of the macro. And then same thing in here. Just like how you have the consolidation range in the higher time frame, and how do you know it's leaving? You wait for an external purge with SMT, and you wait for displacement off the top. If you have this range of time, where we're creating this consolidation range, you wait for displacement off the top, especially if there's a higher time frame PDA that we're trading into, like a 15-minute gap. Once we displace on the top, we respect the top, and we start to leave, you can be pretty confident it's going to likely go towards the draw. If the draw is down here and it starts to displace at the top, you look at that as a purge and revert. And you look for the sell side, especially if that's the bias. Okay, so the consolidation rules here and on the higher time frame, both are the same. Wait for the consolidation range to be purged on one side, preferably, but displacement off the top towards the draw liquidity or the bottom towards the draw is going to be what you're favoring to look for. And then I had some questions inside of the PDF chat about today's price action with obviously what was going on. So one person was talking about how we're not personally interested in longs prior to the Asian low being swept. And I don't think that's a terribly bad idea. And I'm also very proud of the fact that you were able to not engage or not look for something unless some criteria is met. So it's a very good discipline, as also it's just a good mental framework to have, where if you're not getting something that you like and not executing and staying out of it, perfect decision making. The reason that you could be looking for why not this was obviously not purged. If that was your requirement and you want to look for higher prices after we do that, two things have to be true. Obviously, we have to be displacing and disrespecting some sort of PD array for us to even get down there. So on a 1 hour chart, on a 15-minute chart, when you look at that from a top-down perspective, you say, okay, there's a gap here that we're already respecting. Right? Inside of this price action, prior to 9 a.m., we're already dropping this, and candle buyers are telling the story there, and we're respecting this inefficiency. So if we mark out the, the Asian low, whether it's here, wherever it is, right down here, it shouldn't need to, especially if we're starting to hold this, 9:30 to drop all the way back down here, take up the sell side, and then come all the way back up. Especially because technically these are PD arrays in here and in here that are going to hold price up as almost like a breaker, or in this case, like classic support, return, resistance sort of thing. We don't need it to sweep this low, especially if now we start to see SMT here, which there is between YM and ES, or even NASDAQ and right here. You got multiple forms of SMT right there. You got it right here, and you got it on YM as well, right there. So SMT during the session, it shouldn't need to go back down. That SMT has now confirmed the fact that the session low or the daily lows been put in. It should not now need to drop and take out the Asian sell side. And that's just a distinction that some people have to learn of. When the market's not getting you exactly what you want, how do you adapt? Looking at the data, look at what you already know, show what it's, kind of read it without the lens of bias. If you already are marrying to your bias too much and the data is going past you, you're not going to be able to see that data for what it is. And sometimes that's related to the fear of being wrong and things like that. Another question about draw on liquidity versus bias. If the bias is bullish, you don't really need a draw on liquidity that's precise. You just need draw on liquidity in some sort of target that can be shooting for. And depending on how it reacts to that target relative to time, right? If it's hitting that target at 10:30 perfectly, and you expect it to just dig up into that time of day, that's a good exit. If everything else is in line and we're starting to run that at 12, good exit. And you kind of consider that as you go on. But your targets in terms of what you're looking for a day in session, 1 hour, 15-minute IRLs or ERLs, that'll serve you the best. Most consistent, most precise targets that you'll find in the session. Every single time it's going to be one of those two time frames and one of those two PD rays. So in this case, any major ERL that we fill here, let's go to a higher time frame chart. Let's go to the daily chart over here. Since we are within this implied dealing range of the all-time highs to this short-term low we formed in April, since we're within this range, we're already above 75% of the dealing range, right? Between here and here. If you grade it, 75% is normally where you see the last low resistance move. We're already above it and almost halfway through. As we're leaving this consolidation, it's very unlikely that we see perfect, you want to see breakaway gaps being left open in this case. We're not going to see it perfectly come down, rebalance this, and start to slow grind up. It's already done that. It's starting to leave the consolidation. So in this case, this next daily candle, I want almost as a replica of this candle. If it can come back down and either form a fair value gap, where then Thursday digs into the gap and sends us higher with the news, or if it wants to come down slightly, maybe touch that high and then start to print back up, whatever it is, tomorrow I'd be insanely bullish. The only reason I'd be bearish is if we are consolidating for some reason underneath this PM session high, or we form a London high and, in AM session, we run those highs and start to displace back down, and we're looking for an IRL move. Not going to be really taking that. It would just be tomorrow, preferably 10-50 macro buys up until 12 p.m. Not even looking at the chart. If tomorrow, if that's what goes on, I would not be surprised. If it doesn't, it is what it is, and we'll see if we can adjust and find a potential setup there. But my expectation for tomorrow would be buy at 10:50 on demo, sell it at noon. And that would be towards the target with time and price in line. And as long as, like I said, as long as this is now, especially because this is balanced, right? You look to the left, it's a balanced price range through here. The upper portion of this inefficiency is not going to scare me, nor is that swing higher. This volume bounce is just going to want to send it. And especially with the news of whatever he's going to say tomorrow, this smoke and mirror effect of every single time the market wants to move some major, whatever's going on, this is how they move it, right? Tariffs was how long ago? Do you remember anything about the tariffs? We don't even talk about it anymore, right? And it just happens that it lines up with the seasonal tendency. Between April and May, you look for SMT during the spring, and there's your seasonal low. And then now, as it's leaving this consolidation range, we just bombed Iran, and then it wants to come back up. And by the time we open in 9:30, we're back to exactly where the closing price was. Right? We form a gap and we just fill it all the way, and it's nothing, like nothing happened. And it does the same exact price action on Monday that it's supposed to be doing. Low at 9:30, sell it at 10:50. You got a fair value gap being filled at the 950 macro. It's textbook. So this news is not going to change anything. If anything, you look for almost better price action because of it. It's weird and it's probably messed up, but that's the way it is. So looking for that same exact kind of thing. And then obviously you can target further DOTs because of the fact that we're in this longer cyclical structure. The cyclical structure of the week, the day, and the session all are lining up in terms of price and how far it's going to go and draw on liquidity, draw on time. It's going to be longer expansions, longer draw on liquidity is being met. So longer times of full expansion on a daily perspective, on a session perspective. Sometimes even on the session, if we had a good day, you're going to see the session low being started earlier and the session end or the high being formed later, right? If we have 8:30 news on Thursday, depending on what we do tomorrow, if 8:30 news and the low was formed at 8:30 and we just see buys from 9:30 until like 10:30, wouldn't be surprising either, especially if you're right below that all-time high. So there's so many assumptions you can make, and obviously it's not getting addicted to one of them and wanting those to be right. It's just possible outcomes that can happen. And as we come into the session tomorrow and on Thursday and on Friday, just see what it's doing, right? A good trader is just constantly absorbing all of the data, all of the possible data. Instead of looking at just their strengths and what they're good at, they look at all the reasons why they're wrong, how they can trade hard days, and what they can improve on their weaknesses. If today you took a loss, if today it was a hard day to read, you have to study this day more than you study the other days. All right, because then if you're able to build the repertoire of, now you have 17 different profiles you could be looking for just mentally, not even able to articulate it, but your brain is a pattern machine. If you're able to study it, if you're able to learn as many distinctions as you can, soon enough, bias becomes intuition. You look at it for 5-10 minutes here and there, and it just is already popping out to you. Okay, it's probably going to go here. When it's hard, then you have not the answer, but you have the solution to get to how the bias would be. Okay, you weigh both sides, you look for this, you look for this. Okay, this is failing. Okay, well, with great probability, I can say that most likely the bias is going to be this way. If it's not, I know how to flip. And if it's not, and it doesn't meet the requirements for flipping, I can sit out. That's where the skill in trading is. That's what makes you a really, really good trader, is that ability. It's not bottom ticking, top ticking. It's not the ability to, get these crazy trades or whatever, or hold crazy. It's just the ability to become a master at the craft, where you can wake up and you can look at the market at almost any given point, determine the bias, determine how you're going to get in, and not even need to do that because you know that your one session is going to be able to give you that entry, right? 90% of people probably, once you have a good model, if you know where the market's going, you know where the bias is, you have almost zero fear that it's going to leave without you. Almost zero fear. Sometimes you do have some fear that's going to leave without you, but if it gives you what it's supposed to be giving you, you know how to execute no matter what. And that's where learning from these kind of days of why is this high probability? It's doing exactly what it's supposed to be doing, and learning the individual distinctions of what price action is following. You learn to pick up all the different protocols. I've got a protocol personally for low probability, high probability, all-time highs. I've got profiles for different news profiles for all these different things personally, just based off the data that I'm able to absorb. So in trading, years and experience will teach you a lot, but you're able to transfer some of that, not through intuition itself and through the actual experience, but rather the solutions that are gathered from those experiences. And then if you're able to teach them and other people are able to learn them, then they've acquired this weapon, this kind of end result, without having to go through the pain and sometimes the time of actually having to experience those issues. So it's one of the most important things, is able to pick up on all these different variations that can happen in the marketplace, know which ones you like, know which ones you don't like, and you're likely to lose, and then give it your best effort. That's as much as you can do, even with anything, right? So for the most part, I don't want to make this too complicated, but that's really the market review. I mean, you can look at the fact that during, the macro time, you can see in here, 9:30 offers you that swing low. You can see in here, 10:30 to 11 o'clock offers a swing high. You can see in here how the 950 macro offers you an inefficiency because of this wick, right? That's an inefficiency and discount. Uses that during the macro time. You can see how the swing point here at 1050 gives you a macro time entry towards the draw. Everything, right? Like you can see all this stuff starting to line up. And if there's one way that all these things are patterned, you can look at this as, oh, the same thing is going on during all these key times. Then you have a crazy entry model. An ability to look at any of these key times, no matter if it's high probability or low probability, and be able to get in towards the draw and liquidity, not to the draw, but towards the draw. Obviously, when it's going to go to the draw, that makes it easiest, right? Something like this. This 1050 macro. That's going to give you normally to the draw. It's going to give you an entry right before it goes to the draw. That's what you want. Smooth, low resistance, easy run, especially when it lines up with fib targets and things like that. But any of these are going to give you, if you know what the draw is, towards that high probability move. And in this case, you can target later in the day. So tomorrow, I have the same exact expectation that it may look slightly different than this, but I would highly favor if this is giving me an entry towards whatever that target is, and that's going to be later in the day as well. And if it doesn't do that and we're bearish, whatever, I'm going to be able to adapt. So it's not about, I don't care about being right. I don't care if it does it tomorrow. I don't care if it does. It's just, I'm ready for it. Like whatever the challenge is tomorrow, I know I'm able to approach it with the skill set to be able to dominate it. And even if I lose, I'm going to be able to dominate my old self for the fact that I'm going to be disciplined enough to journal. I'm going to be disciplined enough to turn off the chart. Things like that. That's what makes you win. It's like so at a certain point, it's just consistent winning. You can't even lose because all you're doing is you're just following that same exact thing that is going to give you those results. You know, and if you have to skip a day like today, you don't like it. If you take a loss on a day like today, it's not the end of the world, because now you're learning. The fool is going to look at, oh, why did I lose, and pout about it, compared to how can I learn from today? How can I make it so this is just an investment into my model to make a better model and a better mental framework of intuition and a better way to treat a loss. That's the only way that we really are able to learn. You can learn, when you win, you can only learn maybe like so many things. When you lose, it's this cloud and fog of the ego that hides the true learning kind of things, right? So I'll try and do a stream tomorrow, so we'll see kind of how that goes. If it doesn't, obviously it'll be a later stream, so I'm going to see. But otherwise, we'll do another market review just like this, and we'll get back to streaming on Thursday, Friday. Trading commandments, thoughts. So my take on any trading commandments is man cannot follow rules. We are rebellious. We are sinful people. We make commandments. Even if someone that's better than ourselves make commandments for us, we can't simply make commandments for ourselves and follow them. It's just true, right? You disobeyed your parents before. I've done it too. You have commandments, you don't follow them. So my take on it is, I'm not saying it's wrong. I'm not attacking. Just saying the point is not to fix the commandments or make commandments that you're going to follow for a little bit and then not follow them. The point is to fix the problem. Fix it is why we have the urge even to have those kind of things, right? All these commandments. I've done the same exact thing. I probably could go back into my Notion and find a PDF of the 8 whatever. For me, it was like the 8 rules or something was my PDF. You find out that you can't follow them to the T because we're not perfect. And number 2, it's if I don't want to have to, when I have that urge, remember the fact that I have these commandments and then not do it, right? It's not the righteousness I want it to do for. I want to have it so I don't even think those thoughts. So figure out not something to list and follow, is rather, okay, if these are 10 individual problems that you have, that you've identified correctly, okay? But you have to look at from the other side, all right? If you feel like, number 1, you FOMO in a lot, for example. Okay, if nothing is shown by this time, I'm going to do this. If if that's what's going to save you, it's not going to. It's more of like, okay, why do I feel like that, I have to get a trade, right? But I 100% think that if you have this on your desk, you read it every day and you go through this until it's programmed subconsciously, it has a very, very good effect. But I don't think if you're not able to read it through every day with the belief, when you go to bed, when you wake up, until it's ingrained in your mind, it itself isn't going to do anything. But rather, it's just it's a map to show you where your fears are. You fear that you're not going to be able to do these things when it's required for you to do it because you don't trust yourself to take action when it's needed to, right? The behavior, the impulse will affect your behavior so much that it feels like, okay, the last line of defense is I have this piece of paper that's going to help me. When in reality, we've already two down the spiral to even look at a letter of logic and be like, yeah, that's going to make me get out of my fight or flight mode. Most likely it won't. So either number one, you ingrain it into your brain so much that it becomes part of you. You can't just read it blamelessly, like aimlessly. You have to read it with belief. Or number two, you figure out why it is you think those things and why you don't trust yourself to, if you feel like, okay, one A+ setup will do it for me more than 5 guesses. Why does it feel like when a B+ setup shows up that you have the urge to take it? Right? Because it's not, you don't have to remind yourself to do that. It's more of like, okay, I simply don't have the urge to even do that in the first place. That's what you want out of the trading commitments. This is ability to adapt and have your habit be one that's in line with your true goals rather than having a habit that's destructive against your long-term goals. Exactly. Gain the experience and pursue profitable habits. Perfect. And then eventually your brain makes that connection and boom, there's no resistance for that. Right? So hopefully that helps. All right. So today, not too bad, I think. And there's tons to learn from. Just, you don't want to be watching it from here to here. Okay. You don't want to be watching it during the macro time. Don't want to be watching it during Powell speech. I don't even have the Powell speech turned on. It doesn't even matter what he says, right? Don't try and watch it and look at, oh, he said this, it's going to go up and down. Price action will tell you all you need. Wait for displacement outside of the range. Wait for a key time to line up with the drawn liquidity. Don't try and trade within the range. Wait for it to leave. Get in there. That's the protocol for this kind of day. Your protocol also is to wait until further into the range, into time, right? We're not going to try and trade 9:30, try and trade the macro time, try and trade even sometimes during silver bullet. We look for later moves, even sometimes into 11 to 12 o'clock. You almost shift this entire starting point an hour forward, where instead of 9:30 being the starting point, 10:30 is the starting point. You look for everything after that. So, like I said, it was definitely a long market review. I've answered probably one question this entire time. It's already 40 minutes in. So I will post this as soon as it's done rendered. It maybe by tomorrow morning, but we'll have to see. I'm going to try and get this uploaded. I got a one-on-one call I got to upload right before this. So if you got any questions from today's video, you want to put it in the comments of this YouTube video when it comes up, you can do that. I'll be able to see those, or wait until tomorrow. Just write them down really quickly. Wait until tomorrow and we'll get those answered for you if they're not already answered in tomorrow's price action. All right. So hopefully it was insightful and you're able to learn something from today. I appreciate you guys sticking around and listening in, and yeah, just listening to me yap about the market for no apparent reason other than the fact that this market is just perfect. Like, it never gets old. So make sure you journal. If you haven't journaled already, review your trade if you took one. And I will talk to you guys very, very soon. Peace.